Welcome to The Explainer. I'm so thrilled you're here. Today, we're diving into a pretty dense, data-heavy corporate earnings report and translating it into a clear, visually driven narrative of strategic growth. We're looking at biopharma giant Incyte, decoding their staggering second quarter results for 2026. If you want to understand how a company navigates one-time windfalls, billion-dollar acquisitions, and an aggressive clinical pipeline all at the same time, well, you're in exactly the right place. Just to ground our analysis right up front, everything we're looking at today comes straight from this official source material, Incyte's July 2026 press release. Literally every metric, quote, and clinical projection we're about to explore is pulled directly from this document. We're not speculating here. We're just bringing the hard data to life. Okay, here's our mental roadmap for this explainer. 1. The Q2 financial surge. 2. The CMS settlement catalyst. 3. Core product performance. 4. Strategic expansion and AI. 5. Upgraded 2026 guidance. And finally, 6. The pipeline and future. Let's jump right in. Section 1. The Q2 financial surge, a truly record-breaking quarter. Before we hit the raw numbers, I actually want to frame this with a quick quote from Incyte CEO Bill Murray. He said, "Our second quarter was marked by broad-based sales growth, continued pipeline progress, and strategic business development." See, this wasn't just a win in one category. It was a multi-front victory where every marketed product contributed to the overall growth. And all that broad-based success? It culminated in a pretty striking figure. We're talking $1.67 billion in total revenue for the second quarter of 2026 alone. Total net sales came in at $1.49 billion. In the biotech space, hitting numbers like this in a single quarter is a massive achievement. That $1.67 billion actually represents a massive 38% jump in total revenue compared to the exact same period last year. Total net sales jumped an even higher 40%. Now, whenever we see a year-over-year spike this explosive in a mature company, we really have to put on our detective hats. What exactly fueled this kind of hypergrowth in just 12 months? Okay, let's dive into this. Section 2, the CMS settlement catalyst. Let's solve the mystery. So, the critical accounting nuance for the quarter really comes down to this. Incyte reached a settlement with CMS, the Centers for Medicare and Medicaid Services. They basically resolved a dispute over how Medicaid rebate rules apply to Opzelura cream. Long story short, CMS agreed not to treat Opzelura as a line extension of another drug, Jakafi. This win triggered a massive one-time, non-cash benefit of $246 million. It's essentially an accounting windfall from reversing previously accrued liabilities. Now, what's really interesting about this slide is how we isolate the variables to get the true picture. Because of that $246 million CMS benefit, Opzelura's reported growth looks like a staggering 173% compared to last year, hitting $450 million. But when you strip away that one-time windfall, the underlying patient demand in atopic dermatitis and vitiligo still drove a very healthy organic net sales growth of 24%, totaling $204 million. Moving right along to Section 3, core product performance. Looking beyond that one-time benefit, let's break down the two other pillars of Incyte's commercial strength here. First up, Jakafi brought in a massive $817 million. That's a steady, super reliable 7% growth year over year, driven by a 9% increase in paid demand. Then we have the hematology and oncology portfolio, which includes newer growth products like Niktimvo and Zynyz. That surged to $222 million, a massive 69% increase. So we've got steady dominance from their flagship drug, paired with explosive adoption in their newer oncology assets. Next up, Section 4, strategic expansion and AI. Because a company flush with nearly $4.5 billion in cash and marketable securities doesn't exactly just sit around clipping coupons, right? And this brilliantly illustrates how Incyte is aggressively deploying capital. They're acting on multiple fronts, partnering with Halozyme for subcutaneous drug formulations, expanding collaborations with Edison Scientific and Genesis Molecular AI to literally build AI scientists that accelerate drug discovery, and executing smart out-licensing deals like the one with Mirum Pharma. But the biggest move? That's right at the top. The crown jewel of their recent spending is a $1.25 billion acquisition of Vega Therapeutics. With this buyout, Incyte secures Latarcibart, which is an investigational phase 3 medicine for von Willebrand disease.
Now, recent phase 1 and 2 data actually showed an 81% median reduction in annualized bleeding rates for these patients. That is huge. It's a major strategic bet to strengthen their hematology franchise for the long haul.
Section 5, Upgraded 2026 Guidance. All these moving parts are definitely raising the bar. Notice the dramatic jump in expectations here. Incyte's previous guidance had them hovering just under the $5 billion mark for total net sales. But thanks to that incredible Q2 momentum, they've bumped up the full-year forecast. The current guidance now confidently projects total net sales between $5.13 and $5.26 billion. They are blowing right past that psychological $5 billion barrier. And a massive part of that upgrade comes right back to Opzelura. Previous guidance for the cream was maxed out at $790 million. But because the CMS settlement drastically improves Opzelura's gross-to-net profile, meaning more of those gross sales translate into actual revenue, they've bumped that guidance up to between $1.05 and $1.1 billion. Yep, Opzelura is now officially forecasted to break the billion-dollar blockbuster threshold in 2026. Now, we've spent a lot of time on the balance sheet, looking at revenues, settlements, and guidance. But as any focused learner in the biotech space knows, the financial health of today only really matters if it can fund the medical breakthroughs of tomorrow. So what is fueling the next phase of growth for Incyte? Section 6. The Pipeline and Future. Our H2 2026 look ahead. Let's see what's in the lab. So the crucial point here is this number, 10. Incyte is expecting an impressive 10 clinical data readouts throughout the second half of 2026. And importantly, this includes data from 4 registrational trials. We're not just talking about early-stage experiments here. These are the pivotal milestones that can directly lead to new commercial product approvals. Let's move to the timeline and see how this all builds. We're looking at a relentless cadence of catalysts before the end of the year. In Q3, they're expecting an EU regulatory decision for Opzelura in moderate atopic dermatitis. By Q4, we'll see phase 3 data for Opzelura in hidradenitis suppurativa and phase 3 data for povorcitinib in prurigo nodularis. Throw in phase 2 data for Niktimvo in chronic GVHD, graft versus host disease, and you've got a constant stream of high-stakes clinical updates dropping very soon. We've seen the 38% revenue surge, the savvy regulatory maneuvering with CMS, the billion-dollar investments into AI and new medicines, and a pipeline literally brimming with near-term data. It really leaves us with one compelling thought to wrap up today's explainer. With robust cash reserves and 10 major clinical readouts on the immediate horizon, what will Incyte's next breakthrough be? Keep a close eye on their upcoming data drops, because I'm guessing the answer is just around the corner. Thank you so much for joining me today, and keep learning.